how do tax brackets work? Because why would you say it's crucial for individuals to understand their own tax bracket? I feel like that's something that not a lot of people are educated on in the open world. You have to kind of do your own research, but can you kind of break it down for someone who might not know?
Yeah, that also I think is an area where people get really, really confused. And as I was saying, it's a good opportunity to become organized. Now is a good time to really understand how you're taxed, because it's early in the year and you have some control over income and deductions you're going to make for this year. So you want to understand where you fall and how are you going to do that where you're going to do last year's tax return, right now. And so how do they work? You have an amount of taxable income. And right now we won't get into gross and net and everything, but there's a line on your tax return that says taxable income. And that taxable amount, you go to a tax bracket and you might see that, oh, I have this much taxable income, and that means I'm in the 22% tax bracket. But that doesn't mean that all of your income is taxed at 22%. The reason they're called brackets is the first increment of income is taxed at 10%. The next increment of income is taxed at 12%. And then the next increment of 22. So I actually just brought a sheet because I thought maybe you might ask me this, Justin. To give you an idea, if you don't have over $23,200 of income, that's taxable at 10% if you're married filing jointly. But then the amount over $23,200, that gets taxed at 12% of the excess over the 23.2. So the 23.2 is getting taxed at 10, and then above that's getting taxed at 12 until that exceeds 94,300. Then the amount that's over that gets taxed at 22%. So a lot of times we look at our total income and you're like, oh my gosh, if I all of a sudden go over 93,000, does that mean all of my income is now taxed at 22%? No, it just means the first dollar after that is taxed at 22%. So it's a good number to know, but it also doesn't completely blow up what you're going to owe in taxes if you just go a little bit over it from where you were before.
I appreciate you breaking that down, because I was one of those people that saw that and I was like, holy crap, if I go over this line,
right?
They're taking all my money. Yeah, exactly, that definitely makes it a little easier a little more palatable. You get a nice
bonus or something and you're like, hey, I made a lot of money. Oh man, that means I owe all this more tax. No, you just owe a higher rate on that last dollar, those last dollars. So yeah, brackets aren't the worst thing in the world. And it's really important to understand that. And this is a good time of year to make that assessment so you see how these things are affected. We've talked in the past about Roth IRAs and traditional IRAs, and we can talk a little bit about that today, but how much it matters or a difference it makes, you need to understand those brackets up front. That's an important thing, and this is a good time of year to figure that out and understand it. Thanks for tuning in to the video today. And if the conversation we held resonates with you, check us out at goodfinancial.com. Go to Contact Us, and we're happy to schedule a conversation with you to answer any questions you might have and help you in your financial plan.